Nice to meet you. It's a cool view. Today is February 19th, 2026. The market sentiment is unsettling these days, isn't it? Treasury yields are steadily rising. The stock market is struggling, and Bitcoin is faltering. Many subscribers are anxious. They ask, where on earth is the bottom? And when will the bull market come again? But bosses, the current decline isn't simply due to fear. This is a very sophisticated predicted adjustment that operates according to a money timetable, the Federal Reserve, meticulously designed by the U.S. Treasury. Investment experts look at something before the charts. It's called calendar. When the government sucks up money, when it releases money, and when it holds elections. Just by knowing this schedule, we can predict the market's ups and downs. Today, I am reviewing the TGA balance, the Treasury's vault, and the OBBBA, which will be implemented in July. Huge financial flow of 2026 that the November midterm elections will create. Especially, I will explain to you very clearly and easily how you should move your assets between the upcoming July madness, terror, as if you were explaining it to your high school nephew. 1. The fear of April. The liquidity drought, created by tax payments. We need to understand why the market is bound to be difficult from now until April. In one word, it is drought. It is a time when the water money on the ground dries up. There are two main reasons. First, the U.S. Treasury's vacuum cleaner, the TGA. In the United States, the tax payment deadline is April 15th every year tax day. Americans and corporations break bank deposits and sell stocks to generate cash to pay taxes, and then send that money to the IRS. So where does that money go? It comes out of the commercial banks and goes into the Treasury General Account TGA, which is the emergency fund account of the U.S. Treasury. In fact, as of February 26th, the U.S. Treasury's TGA balance is significantly in surplus. You can check it as it is public data. Let me give you an easy analogy. You're playing poker with your friends. The game is fun when the stakes keep going up, but then the house owner suddenly says, "Okay, I'll collect the entry fee," and takes half of the stakes and puts them in the safe. There's no money on the table, so you can't place a bet. That's exactly what the market is like right now, with the Treasury Department declaring that it will fill the TGA balance to $1 trillion. And stocks and coins will inevitably slump until money in the market will dry up. Second, the tariff backlash and deflation. Everyone was worried that President Trump's tariff bomb would lead to inflation, right? But there is a time lag in economics. The initial effect of the tariff is rather deflationary. Why? Let's put ourselves in the importer's shoes. If we face a 20% tariff, we will have to raise the price, but if we do, it will probably not sell. Consumers are also reducing their spending, saying, let's close our wallets before prices rise. Then companies start dumping to get rid of the inventory piled up in warehouses. So, there is a very high probability that the economic indicators for the second quarter will point to economic recession to June and price decline. Investor perspective. This period, February to April, is hell for stock investors, but heaven for bond investors. If the economy cools and prices fall, the Fed will have a justification to lower interest rates. This is the time when the price of the U.S. long-term Treasury bond, ETF, TLT you are holding is at its best. It's time to enjoy the fear and accumulate national bonds. But be sure too, May's big turnaround, opening the dam's floodgates. But bosses, will this suffering last forever? Absolutely not. Come May, the mood changes 180 degrees. Because the government also has to eat and live. Having collected all the taxes and filled its pockets TGA on April 15th, the Treasury now begins to spend the money. Starting in May, we will start paying civil servants' salaries, building bridges, and money distributing locked in the Treasury vaults flows into banks, releasing money into the market again. As the sluice gate of the dried-up dam opens, water fluidity gushes out. There are also political reasons. President Trump and Treasury Secretary Bessent will be horrified to see the economy cool down in April due to the impact of tariffs. I think this was actually all planned. Just need an excuse. If we continue like this, we'll fail in the midterm elections in November. Markets keywords will begin to shift from fear of an economic recession to expectations for a strong stimulus package. The 3 July fireworks, the secret of the Trump account OBBBA. And in July, a decisive blow. No, a nuclear bomb-level windfall explodes. The OBBBA One Big Beautiful Bill Act, aka Trump account bill, will be implemented. If you look at the contents of this bill, it is truly astonishing. Every American child born on or after July 4th, Independence Day 2026, will receive a $1,000 check from the government. But this money isn't given to buy candy. Legally, you are required to invest in U.S. index funds, S&P 500, etc. Do you know what this means? This is a declaration that the U.S. government will forcibly support stock prices by issuing every year national millions bonds. Of children are born, and the money they put into their accounts is used to buy stocks without any questions asked. In technical terms, this is called passive inflow. It means that money comes in unconditionally, regardless of whether the company's performance is good or bad. This is nothing less than state-sanctioned stock price manipulation, more powerful than any other windfall. The law of the November midterm elections. Inflation comes later. Let's add a spoonful of political engineering to this. The U.S. midterm elections are in November. It's the day we receive the midterm report card for the Trump administration's second term. No president has ever seen stock prices plummet right before an election. They do whatever it takes to keep the stock price high and make people go to the polls, even if they get criticized. But here a question arises. No, if you release money like that, won't prices inflation skyrocket? You're right. It goes up. But fortunately, in economics, there is something called time lag. This is called the ketchup effect. No matter how hard you shake a ketchup bottle, it doesn't come out at first, but after a while, it pours out with a bang. The same thing applies even if you loosen the purse strings in May or July. It takes at least 6 months for that to actually show up in price increases. That is, from May to October, money was released. A magical Goldilocks zone will emerge where prices have not yet risen. Politicians are incredibly aware of this timing. The inflation bill is postponed until next year after the election. Just 5 action plan from bonds to stocks, the transfer trading strategy. Here's the conclusion, CEOs. Knowing this perfect scenario, how should we make money? The answer is switching, that is, changing ships at the right time. Step 1, until April, take the shield TLT. As stocks falter amid the liquidity drought of tax season and fears of an April recession, safe haven Treasury bonds rise in price. Don't be frustrated that stocks aren't rising right now, and enjoy the profits from TLT. And never use cash USDT and save your bullets. Even if TLT doesn't rise, U.S. Treasury bonds are a safe asset. Step 2, pull out the sword stocks in early May. In late April or early May, the news reports when there is talk of deflation fears, there is a high probability that the government bond at this point boldly sell more than half of your TLT take profits. Then, with that money and your saved cash, buy Tesla, TSLA, Bitcoin, index tracking ETFs that have fallen to the bottom. When others are throwing things away in fear, it's time for us to pick them up. Stage 3, July to October, enjoy the party. The TGA dam opens, money pours into Trump's bank account, and stimulus checks for the election are pouring in. At this time, don't be afraid and think, isn't it too expensive? And just enjoy the rising market with a full risk-on stance. Because it's a government-driven market. Step 4, run away again immediately after the November election. After the election, politicians take off their masks. And then the delayed inflation ketchup pours in. Then you can sell the stock again, convert it to cash, and wait and see. Folks, 2026 is a year where it will be difficult to make a profit by just sitting there buying and holding. But if you know this money calendar and move accordingly, double kill is possible, where you eat with bonds in the first half and stocks in the second half. The scenario has already been written. As the lead actors, we just have to act well according to the script. If you want to stay one step ahead of others, setting up notifications is essential. I had a cool-headed view. May today be a day where you can protect your assets. And be blessed. Thank you.